Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Monday, October 27th. Moving next to NYMEX oil, and here we see continued price activity down below each of the Ichimoku indicators, indicating a very strong downtrending market in all three timeframes. The Chica span is solidly confirming this bearish activity, and it does suggest that there is good potential for the next move to be to the downside, trade to lower levels. If the market does trade down through this minor area of support that we're testing at the moment, down below the $80 level, we could see the market quickly trading down to the 77.28 area. On a couple of occasions the market has tested to the Tenkan-sen, and that's held as very solid resistance. If the market can rally through there, we have very substantial resistance all the way through to the Kijun-sen, trading about the $87 level. But it certainly does seem, in line with the trend being bearish in all three timeframes, that the next move is likely to be down. But as always, we do require confirmation, and we'd like to see a bearish close down below this area, roughly about the $79.80 level. Just one thing to watch here for, however, is that on this candle where we're now trading to lower levels and just closing beyond the $81 level, we have seen price rejection from this $80 level. And on a candle where the buyers have taken control, it doesn't give us a lot of faith in the market trading to lower levels at the moment. But that obviously is just a short-term reading of the market on this one candle, and we could see the sellers continue to the downside. If the market does attempt to rally, 81 may now hold as resistance, and just above there we have the Tenkan-sen resistance around the 82.14 area. Now, we were looking at something of a pattern that was forming something of a descending triangle. We can, now that we've just tested down below there, the fail to close down below the bottom barrier does suggest that the pattern hasn't been completed, so it's important we have a close, and we can adjust that a little bit. And now it's perhaps forming something of a wedge, and these wedge patterns that tend to move in line with the trend to the downside can quite often be reversal patterns. So let's watch for a close up above the upper barrier, but still they can also be continuation patterns. So the lower barrier at the moment, trading roughly about 79.24, will be important, but what we want to see is a close either above or below, and we want to see either a bullish close or a bearish close to give us confidence in the move. And the greater confidence more confident move would be that to the downside, because that would be in line with the trend in all three timeframes based on Ichimoku. Now, just watching our bands here, and here we see the price action continuing to the downside, and this continual close outside of the band suggests that even though the short-term dynamics here for this candle have favoured the buyers, it does suggest that there still is very strong negative sentiment in this market, and it does add weight to the idea that if we can close down below this area, importantly below the 79.44 low here, we certainly could see the market trading lower. At the moment, this current candle that's developing, we are seeing some resistance at the bottom band, and that's trading at 80.85 at the moment, so it may continue to hold as resistance moving forward. Next to corn futures, and here we see very similar type of trading activity by trading within the band. So we're perhaps seeing a market that's transitioning from a longer term downtrend to a longer term uptrend. Trading within the cloud suggests that we have a neutral market in that longer term time frame, so some indecision in that longer term time frame, but we could be in that transition mode. Trading above the Kijun-sen and Tenkan-sen suggests bullishness in that shorter term and medium term time frame, and that's supported by the Chica span. A very strong bullish candle here today, closing up towards the highs, buyers in control, very solid upside momentum, and suggesting that there is a good possibility of the buyers breaking outside of the cloud by building that momentum. They will need to breach the area around 367.25, but if we do see a bullish close initially up above the cloud and then above that area, we could see the market testing up to around the 380 level or even the 385 level over the next week or so. But there certainly is an opportunity here for the buyers. It depends on whether they're strong enough. It certainly does seem as though with them building this momentum in this current candle that they are are attempting to break outside of the top of the cloud. Just watching here, the 347.75 has held as support, as has the bottom of the cloud. So if we see any selling coming in, that may provide a solid base and reject the sellers. So an opportunity here for the buyers, a very significant opportunity. In terms of the bands here, continued price activity up above the upper band, highlighting the very solid bullish bias in the medium-term time frame. It does suggest good potential for the market to trade to higher levels. Perhaps we'd like to clear this high around the 365 level in a bullish manner to see the market trade to higher levels, but certainly this new candle as it's developing is looking rather bullish and suggesting that we could see the market trade higher. If we do come off, looking to the upper band at 358 to hold a support.